Hey investors, welcome back to Vishal Vealth View. If you are someone who has invested in US equity, specifically in tech stock like Nasdaq 100 or FANG ETF, then past few weeks would have been really painful for you. And the reason is there's a new chatbot, Chinese chatbot in the market called DeepSeek. Now this week in a single day, Nasdaq 100 fell by almost 3%, and investors lost almost $1 trillion in that single day and in that single trade. And the reason is DeepSeek is becoming really popular in US, and now it's the highest downloaded app in App Store. Now, as the adoption of DeepSeek becomes prevalent in US investors are reacting to it because there's a lot of money that has been pumped into tech stocks like Nvidia, Microsoft, Meta, because they are investing a huge amount of money in the AI story. Now, as an impact of DeepSeek becoming really popular in US, investors are now thinking whether the investment in the speculative market of AI is making sense. And because of that, US tech stocks, which are the primary data center stories like Nvidia, was down almost 10%. And the similar impact is observed in India. And companies like Anantraj Netweb Technologies, which are data center plays in India, are down by almost 30% to 40% of the time DeepSeek is announced. So it's clearly the case that investors are now in frenzy and they have invested in a really speculative market when the hype was real. And now they are questioning whether the amount of investment that they are putting in because of this new revolutionary model, does it even make sense? So, investors, in this video, I'm going to answer a lot of questions. First of all, what is DeepSeek? Then, how is it impacting the global data center companies and chip companies? And how is it impacting companies like Anantraj and Netweb Technologies? And what am I doing in this case? So, without wasting much time, let's start this video. So before we begin this video, investor, this is not an investment advice. This is just my opinions and my portfolio. So please do all the due diligence before investing your money in any place in this world. Now, some of you might be wondering what is DeepSeek and what's the fuss all about. So in simple terms, DeepSeek is a Chinese chatbot and it's a direct competitor to ChatGPT and Google Gemini. Now, there are two reasons why investors are reacting in this way and why DeepSeek is better than all of the models that's available in the market. The first reason is the reasoning capability. DeepSeek has better reasoning capability than any other model that's available in the market. And this has been the feedback of many of the users who have used it. The inference time is also low for DeepSeek compared to ChatGPT. And the second reason, which is causing like chaos in investors' mind, is the amount of cost it took them to train this particular model. And these researchers were able to train this model in 4 million USD, whereas the big tech is spending multi-billion USD in just training their model and developing their LLMs. Now, why are the data center stocks and the chip stocks falling because of this? Now, this might be a bit difficult concept to explain, but bear with me. So, imagine imagine engine. Okay, the first engine when it was developed, it was taking it had an efficiency of 1 kilometer per liter. That means it only was able to move 1 kilometer while consuming 1 liter of petrol. Then, as time went through, innovation happened. We found better ways of finding oil. We found better ways of making engines. Its efficiency increased. Okay. And the adoption of the technology also increased. More people had cars. More people were able to move from one place to another using cars. And things like trains, diesel engines came into picture. Flights came into picture. So when we made better engines and the efficiency improved, we started using more oil and the extraction of oil also became cheaper. This is the exact same thing that's happening over here and this is what market is faring. So state of things, uh, in the current state of things, you have certain kind of models that's developed by these American companies like ChatGPT, Google, and they are getting trained on Blackwell chips, which are state of the art, best in class. And these chips are restricted to to be exported to China. And all of the investment that these hyperscalers like Google and Meta they are doing is on the basis of the capacity that they need for the current LLM they have. Now, if there is a process that exists, which is proved by DeepSeek, that they can train this entire model in just 4 million USD, which is far lower than the amount of cost than what all these big techs are putting, then it puts all the things into different perspective. Because if you don't have to spend so much amount of money in just training the model and generating inferences out of this model, then maybe you don't need this much amount of capacity, and maybe Nvidia stock is never going to generate the sales it's saying in next 4 to 5 years. And whenever this happens, you also have to understand, as technology become more efficient, it adoption increases. What do I mean by that? I have a philosophy that as technology becomes more cheaper, it will be more easily accessible. The simplest explanation is, as phone become cheaper, more people in India have phones. आज से अगर आप 10 साल 15 साल पहले की बात देखो तो less than 1% of the population had phone. Right now, I think the number is going to be around 50% to 60% or more than 70% uh, as per the current stats. So this is what can happen as the cost of generating inference training models uh, for these LLMs go down. Uh, there's a huge possibility that adoption in the consumers and the products that are getting created will increase, and its adoption will cause like a huge surge in volume, and all of these infrastructure companies that exist right now, which is just setting up hyperscalers and data centers, will have a benefit from it. Now, investors are just reacting to this phenomena because they think there is a huge amount of bubble that has been formed, and to some extent, there is a bubble that has been forming. Uh, we might not be in a bubble situation like we were in 2000, where we had dot-com bubble, but valuations were really high. And if there's a correction from this point, we should not be surprised. But is the story still intact? Are humans going to rely more on AI? Yes. Do we need AI capacity? Yes. Have we developed the infrastructure for that? No. And we are going to develop infrastructure for that in coming years. Now, if you see impact of this model called DeepSeek on Indian stocks, then majority of the data center stocks are down right now. Anantraj is down by almost 30%. NetWeb Technologies is down by almost 40% in last 3 months. And from the top, I think they're down by almost 40, 45%. Now, why is this happening? Why are these stocks falling? Uh, in my opinion, uh, the investors fear that the amount of money that they have put in for data center business, it will not generate the results. And because of this new innovation. However, I have an opinion that because of this new innovation, it will be easily available for more consumers and more humans because the cost of technology is just so cheap. And if you see what state companies like Anantraj, companies like NetWeb Technologies, or all the data center players are in India right now, we don't have any data center capacity, even for storage, even for normal compute. Forget about AI data center and AI based infrastructure. We don't even have basic compute and storage capacity for our own country. As government is going to put more protectionist law for the data uh, of our country and make our country more sovereign, there's a good chance that the demand might rise. Now, what am I doing in this situation? So, I've already invested in Anantraj a long while back, and right now I'm sitting on loss. So, investors, this is why you should not listen to influencers like me, because whatever stock tip that we are giving on screen, we don't know anything about it, and we just have the information that's publicly available to all of you. So, over here, I think it's still under my strategy. Like it's not something that I did not expect. So I would want to build up to almost 3% of my portfolio in this particular investment. And I'm still not at that goal. And I wanted to build more positions as time unfolded, as the story changed, and as the story evolved, and I understood the story more. So I think after today's sell-off as well, there is not a huge reason for me to believe that whatever data center that Anantraj is setting up, they're just going to go back on its plans. And that's why I would like to stay invested, hold my position, and probably 3 months or 6 months from now revisit and build more position. And if I feel like I want to increase it, I would take it up till 3, 3.5, and even 4. So that's what my strategy is with respect to Anantraj. But right now I don't see a point of selling this because I see majority of this is getting caused by market frenzy and people just being too worried. However, the thing which can be worrisome for this company or my this investment is the P ratio at which this is trading. It's trading at a P ratio of almost 52 right now. And when I purchased it, which is a history and it does not matter, it was trading at a P of 60 to 70. So I invested it at a really high P. And as per my calculation, if whatever they are saying is true, then they should be able to generate 3 to 5 CR on a regular basis revenue from the data center and the real estate business. And I'm fine with that level of market cap to sales ratio, especially in a high tech slash a booming industry. So that's it for today's video, guys. I hope you enjoyed this video. Do like this video and subscribe to this channel. Bye bye. Happy investing. Don't panic sell.